Golden Rule Radio is brought to you by McIlvaney ICA. ICA has been America's foremost precious metals brokerage firm since 1972, helping you build a strategic precious metals portfolio. Call 800-525-9556 to buy gold, silver, platinum, or palladium today, or go to McIlvaney.com.
Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets, and a real quick recap before we get into this week's show. Looking at gold, breaking above 1,800 this past week, sitting at around 1,797, and we'll definitely get into where we think the gold price is going over the next couple weeks. Silver, after taking a nice bump up to just shy of 25, about 24.80, is actually back down and just barely above $24 today. So silver, nice couple dollar move up here over the last couple weeks as well, and sitting at around $24. Will it continue? We will discuss that today. And finally, platinum, after taking a big move up through the end of September into October, going from around 900 to about 1,080, is actually back down, taking a nice correction, and is sitting just above 1,000 today. Is this pulling the bowstring back, about to release an arrow that lets platinum fly to new heights? I'm not sure, but I have a special guest in the studio today, although at this point you're with us about every 2 to 3 months, bringing your sage wisdom. So Rob McLaughlin, really glad to have you back in the studio, especially since otherwise I would be in here by myself today.
Well, thanks for having me.
Now, you and I yesterday, we started off a conversation that we kind of got to thinking, I wonder if this is worth bringing into the studio tomorrow. Mm-hmm. One of the things we talk about pretty consistently in here, and that's gold versus the US dollar. But you and I were talking about gold versus some of the other commodities. Because, as a gold firm, we don't just look at gold. We look at silver. We look at platinum. Well, guess what? Maybe we should also look at copper or lumber or some of the other commodities out there that are also tied to the price. So appreciate you joining today to come in and kind of extend the conversation we started yesterday, looking at some of these metals and how they're kind of relating to each other, not just from a preservation, safety, security against the US dollar, but also as the commodities in general and what inflation is doing to the commodity market as a whole.
Well, and gold certainly has not been keeping up with inflation. In fact, like we talked about last time I was on, M2 money supply versus the price of gold going back 50 years, we're basically as if M2 money supply today versus M2 money supply in 1999, gold was $250. 1973, M2 money supply, gold was $100. Well, here we are just at 1,800, but that M2 money supply related to the price of gold is just like it was in 99 at 250, just like it was in 73 at 100. So actually, the criticism that people have had with gold is like, well, it's not keeping up with inflation. Look at copper, look at lumber, look at oil, especially, or real estate. Gold's not pulling its weight. And I'm like, actually, it's a great value right now. And talk about pulling back the bowstring. I think we have support reasonably at 1760, maybe a little bit lower, maybe 1740, somewhere around there, 1680, worst case scenario. But I think that we'll see gold break through 1,800 and top out around 1,840, and then we'll start the stitching like what we've seen these last few months. What are your thoughts? You think we'll get to 1,900 by the end of the year?
And I'm glad you asked, because I know you asked me that yesterday afternoon. So yeah. I think we call that a segue in the YouTube world, the radio world. I do. And so I will continue with my train of thought that we were talking about yesterday. I would like to see gold break above that 1840. Now, if it holds here, and this is where I will completely agree with you, we've made 1, 2, 3, coming up on 4 attempts now to break above 1840 and push towards the old high at around 1920.
Right.
High from May.
Right.
4 failures. We've already had 3 strikes. Do we get a 4th one?
Well, we've had 4. We've had 4 strikes at 1,800 in the last year.
Right.
Or 1840, excuse me.
Right, 1840. So my question, of course, would be how many times do we get to let gold fail before we have to maybe readjust and look at some of the lower pricing that we have brought up in shows over the last month or two. There are some very strong pricing levels below 1680. Now, I know a lot of people don't want to hear me say that. They want to hear me say gold's going to $5,000 and it's happening tomorrow. But the reality is most people listening to a show like this are probably still in the accumulation phase. They're still looking for opportunity to pick up a few ounces here and there. So personally, if I were a betting man, I do think we're going to see a breakthrough 1840 on this move. Now, that doesn't mean we're going to 2,500 in the next 6 months. I'm certainly not saying that by any means. But I do think simply because of how some of these 1680 numbers have been put in over the last 12 months or so, and where our most recent low at around 1720 before reversing back up, I do think we're going to see a little bit of a breakthrough here, and I'd like to see gold up in the 1920 to 1950 range and testing those highs from the beginning of May. But we're running out of weeks. December's closing in very quickly. As you and I were talking about yesterday, December's not an investing month, it's a spending month.
Yep. It's usually at the end of the year. That's when gold, if there is going to be a price break without a stock market sell-off, it's going to be the last week of the year. That's been my experience, is the last week of the year gives people a good entry point if they're paying attention.
Right. And we do usually see some type of fall jump up in gold.
Yep.
It's now the end of October. It hasn't happened yet. So we could have a bump in November, a decline in December. And January, February is usually pretty good for the metals as well, coming off of that decline when people go, man, we spent a bunch of money in December. Maybe it's time to invest some. So that does happen as well. And then if it's anything like 2021, the beginning of the year was, then we'll have like a 10 million point increase in lumber or something similar too. So I still look at the lumber charts and I think back to the spring when I was building my chicken coop. I could not have picked a worse time in all of recorded human history to do so. So that kind of brings us to where our conversation ended up going, because you brought up a good point, because I think when we started talking yesterday, it was really specifically about silver and platinum and the gold-silver ratio, and looking at what the silver and platinum charts are doing compared to each other.
Well, and if you go online or listen on YouTube channels, you'll hear the majority of voices touting silver. Buy silver, buy silver. And I like silver just fine. But with $24 silver, the cost of a silver eagle is $34. The price of junk silver is $32 an ounce. And I don't mind paying a premium. I just want it to be worth it. That junk silver, you're not going to get anywhere close to $32 an ounce if you go to sell it. You're probably getting somewhere around $25 an ounce if you go to sell it.
The spread has gotten pretty significant in industry-wide.
Yeah.
And we're finding that from clients and other dealers that we work with, that the spread has gotten, well, it's been nuts for anybody who's bought silver for the last 18 months. And it's tightened slightly, but not really. We're nowhere near the types of spreads that you would be used to for the last 40 years.
No. And one thing, too, I love your charts. If you take a look at your silver chart, you have a V. If you look at your platinum chart, you have like an upside down teacup. Just looking at it from a chart standpoint, the spreads on platinum are normal. The price, I believe, platinum may be the sleeper. And, you know, you and I have been talking about platinum ever since I started.
That's why we started bringing you on a year ago, yeah.
Yeah. But I'm still cautious. You're more aggressive on platinum. I'm still looking at a 10% allocation. You like a 20%
I'm more,
allocation.
15 to 20.
Yeah.
But I'm also 15 to 20 years younger than you are. So it may be an age thing. I may just be a, aggressive 40-year-old child to some extent.
But if somebody was focused on the white metals, I've got to admit, I'm happier with the price to my client. There's not an exaggerated premium over the futures price. The spread is a traditional buy-sell spread, 7, 8, 9%, something like that, not 20% or 18% or 22% like silver. I think for people looking at the white metals, I think they really should be thinking platinum, maybe not as much as gold. To me, gold is just money. You can fly anywhere in the world, hold up a gold coin and smile, and they know two things. One, you're trying to be nice, and two, you've got money. It's just a universal language. With what's going on in this world, the majority of my allocation is gold.
Right. And I'm glad you bring that up, especially with the almost religious addiction to silver.
Yes.
Which has been reasonable for a number of years. I mean, silver at 80, 90, 100, 125 to 1 ratio.
Yeah, but bring up your point from yesterday.
Yeah,
if you
exactly.
take the price of a silver coin versus a gold coin, you're actually 60 to 65 to 1.
Right, because right now you look at the futures market chart, gold versus silver, and you're in the 70s,
right,
which still slightly favors silver. I mean, your average 40-year running average between gold and silver is somewhere in the low to mid 50s. Right now, we're in the low 70s. But the reality is, like you were just talking about, at 20 or 25% premiums, that's 18-20% too much.
Right.
So you've got to subtract that off your 75 to 1, and lo and behold, you're at par between gold and silver.
Right.
You take that 12, 15, 18% off, and you're right down at a 50, 55 to 1 ratio. Now, it's still swinging that way. I definitely do not think it's time to give up your silver yet. It's not time to make that transition into
And I would still
full
buy
gold.
more. I would just do it within reason.
But you're not going to be putting 70% of your metals position into silver right now.
But that's what people are doing.
Right. And I think they're too late. This is why 2 years ago, Tori and Robert and I were screaming buy silver. And here Rob, who we've now had on the show a number of times this year exclusively to talk about platinum. Platinum needs to be a piece of your portfolio. Not a massive piece, but it does need to be in there. If you're a gold-silver owner and you haven't added the platinum piece, stop listening to the show. Give us a call. I mean, Rob will talk to you. I'll talk to you.
Yeah.
You'll get straight through to us, pick up a little bit of platinum, because when you look at the platinum to gold ratio, the platinum to silver ratio, and most importantly, the platinum to its sister metal palladium ratio, and you take into account what you just brought up, platinum is not at those significant premiums like silver is. And if platinum catches wind, it sure will be. Those premiums will go up, just like silver did.
Well, and it's like we've talked about before, 60 to 70% of the world's platinum comes from South Africa, and they're going the way
the rest from Russia.
Right. And South Africa is going the way of Venezuela. You know, the richest nation in that continent, just like Venezuela was in the Latin American continent, and neither one can keep the lights on. So you have the bulk of it coming from a nation that has turned communist, and they can't keep it together. And then you have the switch over in the auto sector. I know everybody's talking about EVs, and that's fine, but I can see more like a Prius car where you have a gas motor and an electric motor. I have a Prius, love it. So I do see platinum coming back into the world of the catalytic converter slowly, percentage-wise, as the automakers change over. Because when they switched to palladium, it was a 3 to 4 to 1 ratio. It took 3 to 4 ounces of palladium to equal an ounce of platinum. So they switched to palladium, took twice as much palladium, mixed in a little rhodium, and it did basically what platinum did.
For a fraction of the cost.
For a fraction of the cost. But now you've got palladium twice the price of platinum, plus rhodium is something stupid like $20,000 an ounce. So the automakers are looking at the bottom line, and they are beginning to reallocate back to platinum slowly, and it is going to change. So you have factors both on the supply and the demand side that is going to help platinum. The only thing about platinum is that it's not a monetary metal. It is an industrial commodity, but I think it's a sleeper.
I think that's why, because it's not the monetary metal, exactly what you said a second ago, that's why gold is still the primary investment in any precious metals portfolio.
Yeah.
Always should be, always has been, outside of that one time in human history 12, 18 months ago when the ratio was 120 to 1. There's the one time in our lifetime where it made sense to completely load up on silver.
Even then at 120 to 1, when you did the math, premiums were still high, and those premiums pushed it down into the 90s, maybe the high 80s, but still a great time to have been into silver. When you look at the premiums that have remained constant with the ratio narrowing, basically I agree with you, we're almost at par.
And this is one of the reasons why I enjoy working with guys like you and guys like Rob and Tori and the rest of the gang here at ICA, is because I do think there's great value in taking a strategic and advisory role when working in a precious metals position. I think one of the greatest investment pitfalls anybody can make in any asset, whether it's gold or stocks or real estate or Bitcoin or anything else, is chasing an emotional something, whether it's an emotional high like greed or an emotional low like fear. But having somebody that you can sit and talk through how these markets traditionally cycle over time and build a dynamic and functional portfolio, I do think is important. And I think that's why anybody who listens to our show over the course of years hears our recommendations change. And that's purposeful.
And it does, but also it's very important to use an advisory company like we are, because I see a lot of people going online and buying products online, which is fine. But if you take the price of a Silver Eagle, for instance, we're at $34. If you go to the big online dealers, they're like $38 to $42 a coin. But people think they're getting a better value because they're not talking to an advisor like what we do. And yet they're paying way high prices. Like a quarter-ounce Gold Eagle, we're at around $530 a coin. Online companies are in the $615 to $620 per coin price for the same product. And people would rather crawl over glass than talk to an advisor, but that's what we do. And we can navigate these waters. It's like buying an airplane. Yeah, you can fly it on your own, but wouldn't you rather have a co-pilot that knows what they're doing? And that's, I think, the beauty of the way the McAlvany company is set up, to where it's not a pressurized atmosphere. We show you the whole round trip. How much is it going to cost you? How can you get hurt? What happens when you want to get rid of it? And give people full disclosure. Most companies don't do it that way. They have a product, they want to sell it. You should buy it because of whatever their sales pitch is. That's not who we are.
Yeah, Rob, and I appreciate you saying that. And me coming here a number of years ago, that was one of the things some of you guys who have been here a while really went out of your way to teach us younger guys coming in 10, 15 years ago. And I think that's shown. And that's been one of the fun things about doing this show, is we know that a lot of our listeners out there are already clients of ours, and this is an opportunity not just to share some information about the precious metals markets to anybody who's willing to listen, but most importantly to share info with the people that have been working with us for 20 years. And we know a lot of you guys out there listening fall into that category. So we absolutely appreciate it.
And we appreciate those people. I tell you what, I have over 4,000 clients, and I have some of the greatest people I get to talk to.
Right.
What a joy it is to come to work and work with my clientele.
And I still haven't figured out why, but occasionally I hear you on the phone telling them to listen to us once a week.
Oh, yeah.
So I appreciate that as well.
It's good stuff.
Yeah, so this was fun. I appreciate you coming in, just kind of picking up. We do have people ask, hey, what's it like being a fly on the wall at ICA, and what are you guys talking about? And these are the types of things that you and I bump into each other in the hallway at the end of the day and are kind of looking at and thinking about, and inverse relationships between silver and platinum and relationships between gold and copper, and how these things are moving and what the future looks like and what's the best way to build a as successful as possible precious metals portfolio. So for the handful of you out there that aren't already existing clients and trying to learn as much as you possibly can about the precious metals market, why not give Rob or myself or anybody else here at ICA a call? Conversations are free, and maybe we'll learn something from you, and hopefully you'll learn something from us, and we can sit down and work together to build a strong strategic precious metals portfolio that protects you going forward with the government spending and with the political problems that we're seeing probably over the fairly immediate horizon and next couple of years. So our question always continues to remain, what are you doing to protect yourself, your family, and your hard-earned assets from the long arm of the federal government and the Federal Reserve Bank? So give us a call at McAlvany ICA. We can be reached at 1-800-525-9556. More info can be found on our website at McAlvany.com. We're also on Twitter at ICA Gold and Facebook at McAlvany Financial. Rob, thanks again for joining me today. Really
Anytime,
appreciate
Miles.
it.
I'll see you soon.
Yeah, you as well. And thanks for listening at home, and appreciate you stopping by, and we'll see you next week.